If you want to stop renting and finally buy your first home and you think the down payment is all you need to save, there's a lot more to it than that. I'm going to go over how to figure out your target house price, what a realistic down payment might be, all the extra costs that sneak up on buyers, exactly how much cash you should have set aside, and a real breakdown with actual numbers and dates so you can see exactly how this works in real life. If you would rather wing it and hope you have enough when the time comes, this video is probably not for you. But if you want to walk into signing day with zero surprises, then grab a pen and paper or get ready to take some screenshots. Step 1. Pick a realistic home price. Pick a range based on the prices of homes in the area that you want to live in and on your income. Take a look at Zillow or similar listings in your target neighborhood and then add about 5% for bidding wars or rising prices. And when you're doing this, don't just look at the listing price. Look at the purchase price of homes that have recently sold in the area. Step 2, know your down payment options. You don't need 20% down. That is not the only option. That myth will have you renting forever. If you have a decent credit score, meaning 600 or higher, and a steady income, your down payment could be as low as 3 to 5% with an FHA loan. But one thing to keep in mind is that the lower the down payment, the higher the monthly mortgage is and the higher the PMI is. If you don't know what PMI is an extra monthly fee that you have to pay if your down payment is less than 20%. It's basically a fee that the bank charges to protect them if you ever stop paying your mortgage. Let's say that you're looking at a home for $350,000. If you go with a low down payment of 5%, you'll end up paying $17,500. If you go with the traditional 20%, it'll end up being $70,000. So just your down payment could range anywhere from $17,500 to $70,000. That's how much you will have to save for the down payment alone. And that's not the end of it. Step 3, adding up your closing costs. This is where people get blindsided. You've probably heard about closing costs, but most people don't get into the details of explaining what is all included in the closing costs. On top of closing costs, there are fees that you're going to incur leading up to signing day. These include lender fees, appraisals, inspections, title insurance, taxes, and this usually costs 2 to 5% of the home's value. So for our $350,000 home, we're talking about $7,000 to $17,500. As someone who has been through this process, I advise all my clients looking to set up a plan to save for a home to just save the 5%. Because these little hidden fees and costs and the things you have to do leading up to closing day, these prices can get vicious, okay? Worst case scenario, if you qualify for an FHA loan, is that you're gonna need $17,500 for the 5% down payment and another $17,500 for the 5% closing costs, which brings you to a minimum of $35,000 that you're gonna need to save up to consider a $350,000 home. If you don't qualify for an FHA loan, you're looking at the 20% down payment of $70,000 plus the $17,500 closing costs, which is going to bring you to $87,500. And this is all before you even get the keys. You haven't even begun moving yet, which brings me to step 4. Moving costs and emergency money. Professional movers cost anywhere from $1,000 to $3,000, and you're also going to want to have an emergency cushion. And I tell my clients to save about 2% of the home's value for any maintenance that you have to do in the first year. And for this home, that's about $7,000 for repairs, furniture, or things you didn't think about, like a lawnmower, window blinds. And listen, the maintenance that occurs in the first year of owning a home is inevitable. It will happen. When you're purchasing your home, you're googly-eyed, right? Like your outlook is so positive, as it should be. You're finally purchasing your dream house that you've been saving up for. But you tend to overlook the little things and you're not privy to the big things hiding behind the walls, like plumbing and electrical issues that could come up. Take the safe route and save the 2%. so that if these issues come up, if you have to change your garbage disposal, if you need to replace a window, you don't feel like your dream house is becoming a nightmare because you're prepared for it. You're like, okay, I figured there would be some things I had to take care of. You'll be good. So let's say you want to purchase this $350,000 home in 12 months. What does that look like and what are you going to need? You're going to need the 5% down payment, which is $17,500. You're going to need the closing costs, which is $17,500. The moving costs are going to be about $3,000 and your emergency cushion is going to be about $7,000. So altogether, you're going to need $45,000 in cash. If you haven't started saving anything at all and you're going to start from this point forward, you need to save about $3,750 a month. Now, why does this all matter? Because the number one reason people lose out on purchasing their dream homes is because they underestimated the real cost of getting the keys. They think, oh, I got the down payment, so I'm good. But when all these costs start to add up, they end up having to fall out of the deal and losing their dream home because they didn't really know the real numbers. So knowing the real numbers puts you in control and gives you a real chance to purchasing your dream home. In the next video, I'm gonna go over how to hit this savings goal on any income without feeling broke in the process, because the right plan will save you years of stress. And if you want help figuring out how much it would take you in your situation to save up for your dream home, comment house and I'll point you to my free savings calculator. You deserve to walk into your new home knowing you did it the smart way. See you in episode 2.